All right, what's up, everybody? Colin Andrews here with LearnCryptoFast.com, and we are here to have a discussion on crypto. And I met a gentleman named Minesh Bhindi, and Minesh has been an educator in the education or in the real estate space. And you have a website. What's your community called, Minesh?
So we have a gold and silver education business and it's gold for life and property profits for life.
Got it. Excellent. And so, yeah, I met Minesh last week, and he's actually down here traveling in Medellin, world traveler as well. And, we started having a discussion, and it was in a, party atmosphere. And he asked some really good questions. And I've had a lot of people that I've met that just don't, have zero clue on Bitcoin, crypto, blockchain, and they say ignorant things. And this was a gentleman that is intelligent, does have a very good background on investments, is involved in crypto, but just has some really big challenges with it. And essentially, he was at a point where it was like, F crypto. And he just was like, super against the technology. And as what he said, he's looking for the answers and he wants to be proven wrong. And so what I wanted to do, I've had the opportunity over the last year really doing this, is to find some really sharp folks, like some of the top people in the industry, and learn from them. And so I've had the opportunity to do that. And really the only way that people are going to get involved in this in a large mass type level is if these type of questions, and if smart people who also have authority like Minesh does with a community like he does, that gets the answers that, that he can understand and that he could also share with his community if he feels like he has, those questions. And so that's why I wanted to bring on Tristan Almazog. And Tristan has been a coach with us for Learn Crypto Fast. He's also very much in mining, has just been in the space since 2014. Is that correct, Tristan? 2013? 2012. Okay, got it. So he's been in for a long time, and great to have him on board. He just has a very solid way of just explaining crypto in terms that that new people can understand and people that aren't familiar with the space. And so I wanted to get him on as well. And then we also have Mr. Graham Moore as well on the call. And Graham is VP of Marketing for Polymath, which is a coin that is, and I can let him explain a little bit more, but he essentially they want to do what Ethereum did, but do it for securitized tokens. And they just have they have an incredible team. They're at all the events, and they just are really, truly advocates for blockchain technology. So to have him on board and really understand the background on the security on the security side of tokens, as opposed to the utility side, and how they are really capturing it and really looking to be the platform where securitized assets can be used. So great to have you on, Graham, as well. And so I think I'd just like to open it up with Minesh. You had a couple, specific things. When you said you have a couple of simple questions. I'd like to kind of start off. What are some of your main objections to crypto? And I'd like to have these guys be able to have a chance to kind of respond and share what they found throughout their terms of being of learning this and being in this space.
So firstly, I just want to say thanks for doing this, because a lot of people haven't. So I appreciate all of you guys for actually having this conversation. I think it's super important to have a conversation like this. I'm not even in a party scenario when I was saying F crypto. I'm not actually opposed to the blockchain technology. I do like the blockchain technology, and I think it has some potential. I think execution is a different debate. And I do have around 0.5% of my net worth in crypto, just for, and I never like being in a situation where I'm talking about something without actually being involved in it a little bit. So I have some cash in some coins just to see how it was all going. So my two biggest issues with crypto in its current form is number one, I don't actually see a way for something like smart contracts to actually have validity in an environment where there's a lot of subjectivity based on contracts, right? And how do you factor in subjectivity into smart contracts? And subjectivity is part of the world that we live in. And the second thing is how do you actually make Bitcoin or any crypto a usable form of currency? So my biggest thing to Colin was, if this was called a crypto asset, it would make more sense to me, because then the purpose of it would be pure speculation, and that makes sense to me, right? Because I'm not opposed to anyone making money. So if it was a crypto asset and it was called a crypto asset, it would make a lot more sense to me than a cryptocurrency. But those are my two main issues with it that nobody can seem to answer. So I'd love to hear your perspectives.
Yeah, I'll go first here. So as far as the smart contracts concept is concerned, I don't think lawyers are going to disappear overnight. I think the idea of having lawyers, having courts and everything to perform arbitration in areas where there is contention between two parties where they have a contract, I think that's going to exist for a very long time, if not forever. What I see a lot of lawyers talking about it, and what a lot of lawyers are excited about, is how smart contracts can do away with the very, very simple and easy contracts between two parties where there is a very specified outcome that both parties want. And so the easiest example to think of is a vending machine. I mean, if I put my quarter or my dollar or whatever into the vending machine, I want to get out the Coca-Cola that I want. And if I get that, it's all good. And I don't need a lawyer there making sure that I have the Coke I want. It's pretty obvious. I can verify it. The vending machine knows that it spit out the right thing. That's something in an area where a smart contract can make sense. And something like where you're on Craigslist and you try to buy an iPhone and you put the money in escrow with a smart contract and the iPhone shows up at your house, the person gave you the correct iPhone, they said, and you got the correct iPhone you want, smart contract can be executed. That's a very, very nice place where now we don't need lawyers to do any of that work. With very, very complex issues in law where there are lots of things that might change over the course of the contract needing to be executed, and where there are a lot of uncertainties, I think we do still need lawyers. But what's nice about smart contracts is we can get away with not having to use lawyers for every single piece of the contract anymore. So we can have things be executed automatically when certain things are done, that now lawyers don't necessarily have, let's say, 500 pages of documents to read over to make sure everything's executing properly. They now have to worry about the 20 pages of very confusing and strange things where there might be problems. That's what I'd say on the smart contract side.
So can I just respond to or ask further questions on those two things? So you said the vending machine situation could use a smart contract. Now, to me, that just sounds like extra mental masturbation for a problem that's already been solved, right? You can put a coin in a machine and it spits out whatever you want. That transaction's done. You don't need to record. I don't understand the benefit of recording that anyway. The second point that you said, which was buying an iPhone on Craigslist, for example, which I've bought stuff online and it shows up and it's completely wrong, right? So that stuff makes that's more of a reason to use it. However, you get to the point of going, okay, so let's say I'm a scammer, okay? I'm going to sell a bunch of iPhones on Craigslist. There is a smart contract which says that the person receiving the phone has to acknowledge that they received the phone before I get paid. Fair enough, okay? That, me as a scammer, it looks bad. Now let's put me on the flip side of it. Say I'm a scammer that's buying the phone, putting up the money in escrow into a smart contract. I receive the phone and say I don't receive it. That's where the subjectivity in a contract comes in. And no smart contract that I know of can deal with human subjectivity. Because if I say I didn't receive that phone, the money comes back to me. Now I have a phone and I have the money, and the person who sold the phone is out of pocket. And in that scenario, a smart contract becomes irrelevant.
So
yeah, go for it, Tristan.
Let me just jump in. Yeah, thanks, Colin. Yep. Minesh, smart contract. It seems to me like a lot of your issues or these questions are born from terminology understandings. Smart contract, as Graham was alluding to, is an automated, permissionless escrow service that is publicly available. Okay?
I understand, yeah.
I'll let those words sink in a little for the crowd that might be watching this. What that means is anybody, you, me, Colin, Graham, me and Walmart, you and me and Walmart, any group of people can create an escrow service very easily and cheaply on these smart contract platforms. And that opens the doors for business that may not have happened before because people didn't trust in paper contracts, as our famed president has proven time and time again with small businesses. I don't know if you're aware of that, but he's certainly received goods that he promised to pay for, didn't pay for them, and settled out of court for half the amount. And that is a story told over and over again about Trump. And smart contracts are designed to prevent that type of thing from happening and protect both sides of the transaction. But you make a good point.
How?
Right? Well, you make a good point. Someone could still receive the phone, say they didn't get the phone, and get their money back. And that's a dumb smart contract, right? We need to put more thought.
The problem with that is, sorry to interrupt, but the problem with that is that you have now gone away from the core concept of cryptocurrency, which is decentralization. The point of cryptocurrency, at least when I started reading about it, was that it's decentralized. The moment you have a subjective opinion that whether a technology is dependent on a subjective opinion, it's no longer decentralized.
So we're talking about two different things. You're talking about a cryptocurrency, and I'm talking about smart contracts. So we really should stay on point with what we're talking about. Now, the decentralized...
You're right. The moment a smart contract requires subjectivity, it's no longer decentralized.
Graham made the point that lawyers will always be needed because people will always try to scam you no matter what the technology that you use is around. Smart contracts are an attempt at solving that problem to a certain extent, but I don't think we'll ever fully solve that problem.
So then the smart contract's irrelevant because the current system works pretty well, and MasterCard and Visa's fees, last time I checked Bitcoin's fees, are cheaper than Bitcoin.
So smart contracts have allowed, whether they're illegal or legal at the time they were legal, the funding of very large entities such as Ethereum today. And then Ethereum has allowed the spawning of multiple entities below it, leveraging their smart contracts applications to raise money in ways that are faster and easier than any other company in the history of the world. So there's some legitimate use for smart contracts that's already been demonstrated, and the market is very young. So
yes, but the idea of the fact that a lot of money is running into something makes it legitimate is not an idea that we should use to justify the legitimacy of something, because that's a lot of money runs into a lot of stuff.
It makes it a use case, not legitimizing, but use case. So one brick in that building that is legitimacy.
So even in that scenario, when you say, okay, a smart contract was used for that, the long-term viability of what you've just said is it's not possible, because every ICO that I've looked at, and this is where I actually admire what Polymath is actually trying to do. Every ICO that I have looked at looks like a security to me, and that's what the SEC has said as well. So in every single one of these scenarios, every single one of those people can be put in jail for doing what they've done. So I don't care whether you've raised $50 million, $100 million, whatever, you're going to prison if they choose to go down, if they choose to come down on you.
Sure, and if they choose that every single gold holder in the world should go to prison, then my friend, you're going to join them.
Gold confiscations happened before.
That's right. So it's the world we live in, and your point is, of course, possible. But we don't know today, right? No law has been passed today that says these people are going to go to jail. They are filing their own lawsuits. They are lawyering up themselves. It's going to be a battle. I agree. But
at which point, doesn't it make it too expensive?
Hang on. Something I read, you made the point, in your post, you made the point that you don't want to hear they'll fix it in 5 years. Well, I don't want to hear they'll get arrested in a year, right?
I didn't say that.
You alluded to it, saying the SEC has said these are securities and they're going to go to jail. But the SEC has not said these are securities.
I didn't say that. What I said was the SEC has said every single one of these ICOs looks like a security to me. if it is a security, the way they've been sold breaks the securities laws. Based on that, if they chose to go down that route, then they would go to jail. That's what I said. And so the SEC says they're going to go to jail.
Right.
So let's. I'm not saying that. What I'm saying is,
but you're making an argument about something that hasn't happened yet, right? So I can't. It hasn't happened yet. You might be right. You might be wrong. They may say, nope, these are actually utility tokens that can be used for services and goods, and that's what they were selling on the market, not securities, right? That debate is in the courts. I don't have an answer for that debate.
Go ahead, Tristan.
No, I'm done.
So one of the main things, it sounds like, Minesh is asking is real use cases. And so, whether if you guys can, share a couple things when it comes to smart contracts that is actually being used, whether it's, multi-signature wallets, these type of things that don't need a third party, that are, as you said, have the ability to execute without having a third party involved in it. Can you guys kind of, share a little bit more on those type of specific functions?
Please.
Because the only way those currencies are going to have actual value if there's mass use case for those. And I'm sure we all agree on that, right?
Okay.
There's mass use case.
Of course, Minesh, of course. Graham, if you don't mind. So there's two cases of smart contracts or cryptocurrency and smart contracts with cryptocurrency that I would like to bring up. And one of them is really silly, but is an excellent example, and the other one is serious. The really silly one, whether you want to, laugh at it or make fun of it or not, is CryptoKitties. Okay, I bring it up to people all the time. It is an elegant example of smart contracts building wealth within a market, all on their own. This company built these smart contracts and then released it out into the wild, and they've generated upwards of $20 million already in value. The market is worth about $20 million, which, okay, drop in the bucket, but it's an example of smart contracts being used in an automated way to generate value. That's
and Tristan, can you, for everyone that doesn't know, because there's going to be some folks that are new to the space, haven't heard about CryptoKitties, can you kind of share what that is?
Sure.
And kind of show how it is.
So really quick, Colin, CryptoKitties is a set of smart contracts that were created by a marketing company that is sort of a game. And you start out by investing some Ethereum, and you get some CryptoKitty tokens. And with those tokens, you can buy a cat. And it's sort of like back in my day when I was growing up, it was a Tamagotchi. Then in the 90s, it was something called cats and dogs, where were these animals that you could raise, feed, and take care of, and that kind of thing. And this cat is represented by a smart contract. You can then pair that cat with another person's cat who you may have paid in tokens to borrow for the pairing, and the two of them will produce a third cat. And that cat will be yours, and you can then lend that cat out or lease that cat out to someone else who wants to pair it with their cat and make another cat, and so on and so forth. And it's this ever-growing smart contract network that gets built around these CryptoKitties that mate and produce another cat. And it's very silly in nature. But in my opinion, is an elegant example of smart contracts being used in an automated way to generate value. Now, granted, I did start out by saying it was silly, right?
Sounds like a version of the Kardashian future.
Yeah, possibly. But I think it has a niche in this world, right? I think it has a place in this world and generated value on its own. And that was an interesting example.
So how is that different from making Angry Birds on the Apple Store?
It's leveraging smart contracts in a way for people to interact with each other. You could have coded it without smart contracts, sure.
Of course,
but this marketing company with not a lot of coders were able to learn Solidity really easily and quickly in order to create this thing in a matter of days. And that's the power of smart contracts, is that you're able to generate a whole game that has interactions within itself within a matter of days because of these smart contracts that exist, this platform that exists. Now, I said it was silly, right? It's a silly example. I'm going to stick to that.
But I actually appreciate the example, right? Because it's a new style people could use to actually create wealth, which is what happened in the App Store. At the same time, you've got to get away from trying to solve problems that have already been solved. That's my point.
So here's another one, and this is the more serious one. I wouldn't say it's a problem that needs to be resolved, but it'll lead me to an example that might be a problem that needs to be solved. So my example is VideoCoin, and Colin is very familiar with VideoCoin. I had the pleasure of meeting the team of VideoCoin. Thank you for that, Colin. They have a platform that, in my opinion, legitimizes this concept of cryptocurrency. They want to offer to the world a decentralized transcoding, hosting, and receiving video platform. So this is the type of thing Netflix might use. And they're going to leverage decentralized machines and their computing power to transcode the video and host the video and then serve the video wherever it needs to go. And the idea is that you're cutting down on last mile requirements because pieces of the video are localized to where you need to deliver that video to, and you no longer need big data centers. Everything's decentralized and supposed to help with attacks from hackers and basically make the data more decentralized and secure, encrypted and secure. And that's what they're working on. And they're going to reward the miners, which are the people that either transcode the video or host the video for you in their coin. And you can then sell their coin on the market that people who need the transcoding, such as Netflix or HBO, who need that transcoding will buy the coin in order to pay for transcoding on this distributed network. And it's the cyclical market that leverages a token very well.
And so just to ask there, right? What would the people that actually receive those coins that are sent to them as payment, what would they be doing with those coins? Keeping them in that keeping them in that token, or exchanging them for US dollars?
Well, they would be exchanging them. And
so at that point, what is the point of doing that? Versus, so it makes sense if, for example, what's the point of it?
Because you can't go lower than a penny on the dollar. Whereas you might be able to transcode half a penny of video and want to get paid for it. Now we're allowed micropayments to the tune of 8 decimals to the right of a Bitcoin. That's in Bitcoin's case.
So then if they did that and they received that, they wouldn't be able to cash out of it anyway.
Because no one would buy it?
No, because if they got less than a penny, right? As an example, they wouldn't be able to cash out of it.
Okay, so if you really wanted to be a pain in the butt, you would mine one video file and receive a fraction of a penny and not be able to do anything with it. But
just using that as an example. I'm just using that as an example.
Hang on. I'm trying to take your example and put it into the real world, right? In the real world, I, as a miner, am not mining for 1 minute and then bouncing off the coin. I'm just not doing that, right? If I'm going to mine a coin, I've done my research on it, and I'm going to mine that coin for a little while. During that little while, I'm going to accumulate enough to at least cash out, or there's some brains behind mining. It's not some mindless thing that you jump around in and only mine a coin for 1 second and then move on. It's not the way it works.
So you're going to be mining for more than 1 penny, basically.
Yeah, I'm going to be mining for what I can sell, right? That's my point as a miner, is that I've got to mine.
So then why not? So your argument for that was.
So hang on. The point of where you're going.
The point of the currency was that you can get less than 1 penny. So if you're going to be mining for more than 1 penny, why the hell do you need the thing in the first place? But to do it with the US dollar.
Because as you're mining in real time, that value needs to be accrued somewhere, and it's accrued locally on my machine, so I can see it happening in real time as I'm doing the work, versus having to wait for it to accumulate and then trust the central company to pay me exactly what I need to get paid, which, as we all know, happens a lot in the world, that you don't get paid what you need to get paid. They take out fees and they take out percentages and they automate, a reduction in what they think that you're owed. And so, it's happening in Uber and Lyft right now, right? Uber and Lyft are totally gouging their drivers to the point where I just read this morning, some guy, rather than take his fare to the airport, dropped him off at a local gas station and said, there's no way I'm going back to the airport for $6. It's going to take me an hour and I'm not working for $6 an hour. And that was Lyft that came back to him and said, hey, it's going to cost you, we're going to pay you $6 for this hour-long drive. The guy was like, no way. So there's...
I don't understand your problem with, I don't actually understand the problem with that. Wouldn't a video coin be doing the same thing, because they're going to pay whatever the market's willing to pay, right?
They're going to pay me in real time as I'm encoding the video, so that I know that they're not gouging any. There can always be trickery. You're right. The idea behind a blockchain is that it's open source. I don't know if VideoCoin is open sourcing their code, but the idea is that you'd be able to check on that. But I see your point.
Well, I'm trying to, my basic argument of this whole thing is that I have not found one example where using blockchain and using a cryptocurrency is better than the current system we have, even when it comes to as simple as cost. Because the whole point of the whole thing to start with was it would be cheaper, but it's not. When Bitcoin was going crazy back in November, December, I sent $2 worth of Bitcoin to my niece, and it cost me $25 to do that. That's how much an international wire cost me.
Sure. So that's just Bitcoin, though. There have since been other cryptocurrency technologies that have handled that problem. And they're up and running. So they're fairly free to launch.
You're absolutely right. But at that point, you've now got 21 million or whatever, however many more million coins that can be mined. So at that point, the value of as a currency is no longer relevant, right? Because you can, the whole point of the reason why the US dollar has value is because the central bank does what it does to maintain the demand and supply of the actual currency. And so with cryptocurrencies, what you can do is Bitcoin itself, you don't even need to create Colin coin, right? You don't need to create anything. Bitcoin itself can fork. You've got Bitcoin Cash, Bitcoin Gold, Bitcoin whatever. And so they've got 21 million of each of those. So now the supply is unlimited, but the demand isn't there. That's the whole purpose of a central bank, to balance that.
Would you argue that the supply of the fiat is unlimited? It just takes someone's decision?
Absolutely. But they have smart people maintaining that. Whereas what's happening with crypto is you've got
smart people
people mining as many things as... Yes.
Smart people in 2008?
Absolutely not. Respectfully, what I will say is that I don't think crypto as a currency, and I said that right at the beginning, if it was a crypto asset where the purpose of it was to speculate on the price of it for a profit, that would make complete sense to me, right? Because you can buy anything you want and hope it goes up tomorrow. I don't have a problem with capitalism. When you say it's a currency, it confuses me as to how you maintain that and how you maintain the value of a currency, because you've got to maintain the stability of the price value.
Right. So again, I said at the beginning of my little triad there that your issue is terminology, right? You're right. It's not.
I don't think so. I'm going
to side with you, Minesh. It's not currency, right? That's the wrong term. It is an asset. And it's an asset that you can trade for currency. It's an asset that you can trade for goods and services. It's an asset that you can trade for, for food, for, like goods and services. I guess that covers everything. Just like, someone who might really want, this painting above my head, they're going to trade me maybe some gold rather than currency, right? And that's not a currency. That's an asset. And you're right. I would argue with you that, I would agree with you that crypto assets is a much better term, and there are people in the market that use that term as opposed to cryptocurrency.
So then at that point, where does the legitimacy of using any crypto as a currency come in, and what is the purpose of Bitcoin, Ethereum, and all these things if it's not, as you've just agreed with me, that it's not a currency?
Yeah, I'm going to jump in here.
It's a tradable.
I love that.
Go ahead, Graham.
Yeah, Minesh, when that time in history when you sent your niece that $2 of Bitcoin in November 2017, that was the weirdest time in history ever for Bitcoin, especially in terms of transaction fees. The fact that was the transaction fee then is sort of an anomaly. So that was the highest it's ever been, and in my opinion, the highest it ever will be. So the network was completely full. The mempool was where essentially unprocessed transactions go to be processed was around 140,000 transactions sitting in there, just because there wasn't enough transaction throughput on the network. So with layer 2 solutions, things like the Lightning Network coming online for Bitcoin, different scaling solutions on Ethereum coming online like sharding and Plasma, I think transaction fees will be much, much lower than what you experienced at that one time in that weird period in history. And so yeah, it costs $25 for you to make that one transaction, but generally it's more like pennies and maybe dollars. And so when you are looking at things like international commerce and sending international payments, it is vastly cheaper, much quicker, and much easier to do so. You don't have to write out the company's address, where the bank is located, the intermediary bank, all of these banks aren't taking fees along the way. There's no chance of it going to the wrong place. You just copy and paste an address. So in that respect, I'd say it is.
Hold on a second. That's the one where I got to stop you. I actually, I agree with what you're saying.
Minesh, hey, Minesh, real quick, bro. You got to let these guys finish their comments, brother. They're not interrupting you. You got to let these guys finish their comments.
I agree. I apologize. Go for it.
Yeah, I mean, I'd say that was getting close to the end of it. But so generally, I would say 99% of the time, sending international payments is vastly cheaper on several orders of magnitude with cryptocurrencies compared to government currencies.
And Graham, while you're actually speaking, and I appreciate you sharing that as far as when Minesh did that. When I was sending Bitcoin transactions in November and December too, I was definitely like, wow, look at that. And that's part of it, being new technology as well, and it is developing. Graham, can you kind of go through some specific use cases that you've seen with smart contracts, with using crypto, that you've seen that is working? It's not something that's pie in the sky or that's 5 years down the road, but that's actually being used right now.
Yeah, right now, I mean, people sometimes think that this isn't a legitimate use case, but ICOs are a very legitimate use case of smart contracts. Somebody is raising money. A group of people can send money to this person, and in turn, they can be issued something that they're looking to get. And so, I mean, that's kind of what Polymath is working towards, is this future where a company can raise capital and issue actual financial securities in a very seamless and easy to use way. So a company just puts up an address and says, I'm looking to raise $1 million for my startup or $100,000 for my startup or whatever the case may be. Investors can look at the source code of that company, ensure that they're sending money to an actual person with actual businesses, with actual employees. They can send that money and be sure that they will receive the financial security that they're actually looking to get. And so this is just going to bring down costs dramatically. And that's where I see one of the use cases of smart contracts having a big amount of impact, is these simple kinds of contracts between people where there is not a huge need for lawyers to intervene because there aren't very many irregularities or things that are kind of murky and unknown.
Can I just jump on board real quick here, Graham? Saw something you were talking about earlier with regards to how easy, cheap, fast, and simple it is to transfer money around the world using cryptocurrencies versus banks. And talking about a real-world use case of that, the UN has been using Ethereum to transfer money from U.S. and other Western worlds to African and third world countries for the last 9 months. And that's a pretty solid use case with a pretty solid endorsement, in my opinion, for cryptocurrency.
No, that's solid. I hadn't heard of that before. And, let's actually kind of take it more with what Minesh is involved in. Minesh, when we were speaking, you said that with the fund that you are raising, you're using ETFs to raise money. And this is something that Graham could actually probably has a lot of knowledge on, the benefits of using using blockchain, using crypto in order to, let's say, raise $20 million in order to put it into real estate. What are some of those benefits of using whether it's Polymath or using a ICO type model to raise funds for let's say specific real estate deals, raising money in order to want to buy $20 million worth of commercial property in the States. What's the benefits of using crypto as opposed to the normal fundraising activities that are currently used?
Can I just ask one question before Graham answers that?
Go for it.
Can I have one security token that's been launched through Polymath?
So the first one will be out in April or May.
So it's not out yet?
Correct. No, we're a pretty new company.
Can you talk about which one that is? I just want to, or can you not talk about that?
Yeah, no, we can talk about it. So the first one is likely going to be a company called Coral Financial Technologies, CORL Financial Technologies. They're a company out of Canada.
All right.
And what are they going to be doing?
So Coral is a company that buys revenue generating businesses. And so the token we're helping them create is a revenue sharing token. So if you own whatever one Coral token, you receive X percentage of Coral's revenue each month that's spit out in a dividend perfectly to your Ethereum wallet.
Excellent. And then as far as just overall benefits on raising money, the question that I had before Minesh asked his.
Yeah, there's less intermediaries involved, and it's cheaper and faster to do so. That's the easiest way to talk about it. You don't have to call Goldman Sachs. I mean, you can if you want. And then the big benefits come in the secondary trading market, I would say. So if you want to trade stocks today, you have to pretty much be online between 9:30 a.m. and 4 p.m. on a weekday, which to us makes no sense. So when you're trading securities that are tokens, the market does not close. There's no downtime on a blockchain. You don't have to take the weekends off so you can reconcile all of the trades that happened and make sure that there were no mistakes, of which there were probably a lot when you're trading typical financial securities. So those benefits are really big when we start to get into the world of financial securities being infused with blockchain technology.
And a quick question there. How do you maintain, so the security token I'm interested in, right? Because that's something that I think could have a potential use case long-term and simplify the contractual side of actually raising money. But how do you verify an investor's ability to actually invest in a security through the securities laws of, for example, the United States, in something as a security token? Because you're not going to get somebody who's going to invest $500 at that point, because I'm pretty sure that would be illegal to raise that money from that person. They have to be a sophisticated investor, unless I'm wrong on that.
No, yeah. So I mean, we're essentially following all of the laws that have existed for the last 100 years in terms of securities laws. So anytime an investor wants to purchase a financial security, they need to pass through a KYC process. And so how we do this is in the initial offering, the issuing company picks a KYC provider of their choice that's experienced in the space. And every single investor who wants to purchase that security from that company needs to pass through that KYC process and verify their identity, whether it's sending in a passport and any other additional documentation that they need to send in.
Okay, so based on that, you're moving away from the...
Minesh, I wanted to make sure that, especially for people that haven't been on here before, any type of terminology that we describe it to, so people understand. So KYC, know your customer. Just wanted to make sure I define that. Go ahead, Minesh.
Yeah, thanks.
Yep.
So what I was saying, the moment that you have to pass KYC, the moment that you have to wire money to an exchange in order to get that money exchanged and be a legitimate source of funds and prove the source of funds and all this other stuff that comes with the amazing financial world that we live in, you're in essence moving away from the core fundamental romance that cryptocurrency created, which was it's anonymous. You can do it from anywhere. Anyone can do anything you want. And it's completely decentralized. No one knows what you're doing and nobody knows any of your assets. So are we moving away from that, or are we still saying that it has those benefits?
It has that some benefits in some places, and then in others it does not. So, I mean, the internet is an open protocol that allows anybody to send information from anyone to anyone, anywhere, anytime. But I mean, Facebook is still a centralized entity built on top of the internet. Twitter is a centralized entity built on top of the internet. Polymath I mean, we are a decentralized protocol, but in terms of the KYC and verification process, I mean, that becomes essentially centralized. You have to prove who you are. I mean, a lot of people thought in the early days of the internet that it was going to be this complete anarchist utopia. Nobody's going to know anybody who you are. And people thought it was crazy that you'd put your actual identity in a forum somewhere online or on a social media site. They thought that was crazy, but people wanted that. And so blockchain technology and cryptocurrencies do have this one kind of use case of, you don't have to come out and say, this is who I am, and you can transact without being known as a person. But a lot of people and a lot of use cases do require that. And so I think we're going to see places on blockchain technology that exist where people are completely anonymous, or at least pseudonymous. And we're going to see places where people are completely known.
Yeah, I'd like to actually jump on that, Minesh. Sorry, real quick. On that anonymity question, I like to refer to use cases to prove the validity of cryptocurrencies. So I'm going to give you another use case. Just today or yesterday, no, today, I was reading an article about how Venezuelans are desperate for Zcash. But they're desperate for Zcash because the government has made it illegal for you to hold and purchase US dollar. So what they want to do is leverage the anonymity of Zcash to convert bolivars into US dollar through this exchange that exists in Mexico. Mexico has just adopted Zcash as a platform that people can do that on. And so it does give them the ability to circumnavigate the government, which, okay, is illegal. I'll make that argument. But that government isn't necessarily one that we support in the US, so we actually kind of support their move to do this. And they're going to leverage Zcash's anonymity to do that. So in terms of moving away from what the core belief of Bitcoin was, I don't think so. I think we're splintering multiple beliefs that was Bitcoin. Bitcoin brought, actually, believe it or not, multiple technologies to the table that we didn't have at the time. It wasn't just the blockchain, and it wasn't just this concept of permissionless exchange of value. It was also the concept of decentralization, which allows for protection against hacking. Normally, data is stored on centralized servers, and when you take that data and you give it to everybody, suddenly anybody can download it, except you've given it to them in a form that they can't read, right? And they can't break it, and they can't get into it. They can have it all they want, they just can't read it. And that's one of the core features of decentralization of Bitcoin that does not talk to this concept of an entire world that is decentralized. We can't live in an entire world that is decentralized. We work as communities. We work as businesses. And you make the point yourself that businesses need centralization. They work better that way. Yes, I agree. The decentralized portion of cryptocurrency is the concept that you can exchange values or tokens without permission. The data is totally secured because it's not centrally located. It is decentrally located. And there's a lot of people out there, such as myself, miners, who are working hard to lock that data down for everybody who's using it.
Right. But just to point out on what you said there, as far as the decentralization side of it, right? Yes, the idea of it makes a lot of sense to me, and I think having a complete open ledger that everyone has one access to makes complete sense. The problem happens when anyone who's a normal human being wants to actually take advantage of that. They have to go through a centralized institution like Coinbase, like anything else, which is subject to hacking, which is subject to stealing money, right? Which has happened over and over again. So the idea makes sense to me. The execution of it is flawed. That's the problem. That's what I'm trying to say. I know you hate
this answer, but they are working on decentralized exchanges. Okay, so that's exchanges where the data doesn't exist in a central location. Right, no, I get it. You hate that answer coming in the future. I get it. You hate that answer. Fine. Yes, you're right. We needed centralized location of exchange, but that's true of any market, right? And
yeah, that's what I'm trying to say. Exactly.
Well, okay, except, hang on. Except if I want to store my Bitcoin, it's stored in a decentralized way. And that is a key technology that was brought to the table. If I want to store my dollars, they cannot be stored in a decentralized way. I can't do it. Right? It's cash in a box. It's one location of a server which records some digits for me. I can't store it decentrally. Right now, I have Bitcoin that is stored on a public ledger, totally decentralized on multiple computers, which means if one computer fails or one computer gets hacked or whatever, it's stored in many different locations, including multiple nodes that I own for myself, right? And that's a level of protection that's never been afforded to the world before.
I agree with you. Completely agree with you. Except you and Graham and Colin and me, we understand how this stuff works. And even if I don't understand it, I can go and figure it out. But in a normal use case scenario, my dad, for example, my mom, they're going to store their money not on a private blockchain because that gets too complicated. They're going to store it on an exchange, which is a centralized process. I'm not talking about the core concept of it. It makes complete sense to me. The execution of it from a real use case scenario, a normal person, is where there's problems for me.
Yeah, I got to step in there. Minesh, your mom and dad, if they learn crypto, they're not going to store it on an exchange. They're going to put it on a desktop wallet like Exodus. They're going to put it on a paper wallet. My Ether wallet is another one. So, there's places that are very simple to set up that because it's not on the exchange, because then they actually have it. That's not, when you have it on an exchange, you don't actually own the tokens. You have a receipt, so to say, that yes, you have it on there, but it's the same thing that if I put $1 in my bank and I pull that dollar out 2 weeks later, that's not going to be the same dollar that I put in there, right? However, if I store it on Exodus, I control the keys. And so, if your mom and dad, just as simple as them, being able to store it on an exchange like Bittrex or Binance, they're going to be able to just as easily store it on a place that is completely safe, that is not connected, to the internet, that's not being held by an exchange. And so it really is, and is becoming even more simple and easy for people to store their tokens off an exchange.
So have you just said that if I store my tokens on Coinbase, that I don't have any security over those tokens? I don't have any privacy over those tokens. They're not mine until I take them out. Because if that's what you're saying, a lot of people need to watch this and get the hell out of Coinbase right now. Because if that's the truth, that's scary.
100%, Minesh. That's one of the things that we are trying to share with people, is that you don't want to keep them on an exchange. That's the difference between what we call a hot wallet and a cold wallet. Hot wallet is being that it is on the exchange. It isn't decentralized. They have been hacked before, and that's a point of weakness. And so that's really what we're trying to do, Minesh, is to share to people that you can use these other types of ways to protect yourself. So, I mean, you made a very good point as far as people do need to know this. That's why we're trying to make these comments. That's why we want to do these calls.
I agree with you. So Coinbase is completely dangerous, and no one should store their money on any exchange whatsoever. So we should let everyone know about that. Second,
hang on.
Yeah, go ahead, Tristan.
Sorry. So Coinbase is considered an on-ramp. Okay, this is a central location where you can purchase your first set of cryptocurrency. Right? Don't leave it on an on-ramp. You don't park your car on an on-ramp to the highway. You don't do that. You get off the on-ramp onto the highway, right? So then you want to take those coins and either go to another exchange where you might buy the final product that you want, because most tokens are purchasable with Bitcoin, but they're not. You can't buy dollar to token. For example, I couldn't buy salt with dollars. I need to buy Bitcoin, and then I need to buy salt, right? So you're going to use on-ramp to buy that Bitcoin, and then you're going to get on the cryptocurrency superhighway and start buying whatever tokens you want with your Bitcoin, right? And then once you've got those tokens, you've got your allocation, you've got your portfolio, you download those tokens off of the exchange. Thank you, Salt. Yep, proof of Salt. Love it. You download those tokens from the exchange and you store them in two forms. One of them would be...
That must be an insider joke.
You store them in two forms. One is a downloadable wallet, like Colin was saying, kind of cold wallet that sits on a computer. And then also you can put them on a paper wallet, or you can put them on some kind of hardware wallet, such as a Ledger Nano, which is this thing, or a Trezor, which is another type of hardware wallet. And this is like a USB stick that you can put somewhere else, right? So you've got multiple copies of the same private keys, which are your private keys that lead you to your money. And if you don't want anybody to have access to your money, you hold your private keys securely. And you store those away, and you're more safe than if your money was centrally located on a bank server that's constantly getting hacked. We all know that Home Depot and JP Morgan and Fannie Mae, and they're all getting hacked like crazy. Here, nobody can hack this. It's a disconnected device that's storing my money for me, and I don't have to worry about it.
As a normal individual, what insurances do I have against theft and loss?
Give me the same answer for gold coins.
No, absolutely, I agree with you. That's why we use ETFs. That's why we use smarter ways. I'm not. So when I say gold, the things that people go straight into is, oh my God, the zombies are coming. That's not me. I'm an investor. I believe in investments. I don't believe in the zombies. But what I mean is, in a real use case scenario for cryptos, for normal people, I'm not talking about for us. I just want to make that very clear. I'm talking about for masses. In a normal situation like that, if I'm a normal person that doesn't understand anything, I'm not going to take the risk of storing my cryptocurrencies where I need a 20-character address and I spell one letter wrong and all my money's gone that I was trying to send to someone, and I've got no recourse coming back to me where I can go call someone up and say, hey, I just pressed something wrong. I transferred some money to the wrong place. Can you send it back to me? Because no normal person is going to do that.
Yeah. So my answer there is, and Graham, if you want to step in as well, but my quick answer to you there is, this is a very young technology and solutions to those problems are being developed, which I know you hate that answer to, but it's similar to a lot of problems that were being experienced in the early days of the internet. And now look at the internet, right? We've solved a lot of those issues, and now we've got ubiquitous internet that everybody's using in a very simple way. And I understand it's a frustrating answer today, but that's why cryptocurrencies are high risk, right? Nobody's said otherwise. Cryptocurrencies are high risk. So you take that risk and you operate in the form that it is today. And eventually, yes, 5 years down the road, I know you hate that answer, but 5 years down the road, they will solve that. And Graham, if you have more to add, go ahead.
So do you have a vision of how they would solve that? Or is it just, you're just going to trust someone else to do it like we do religion?
Well, I mean, quite honestly, the one possible solution is decentralized exchanges. So if all of your data from an exchange is stored decentrally and encrypted, then you can be assured that no person can steal your private key. You'd hold the private key to the data on the exchange. It just sits on the exchange. That's one option because, yeah, that's one option. I wasn't prepared for the future view question on how to solve that problem. But Graham, if you have any ideas.
Yeah. So another thing that you could do is as a person with the example of you send Bitcoin to the wrong address, it's gone forever, is people can start linking their identities to wallet addresses. And so it'd be the same as you would type in the address, whatever, and their face would pop up. And then you go, okay, yeah, I'm definitely sending it to the right place. And there are some solutions that are coming. Like being a non-technical person, I can't really explain how it works technically, but if you send something to the wrong address by one digit or something, there might be an ability to recall that and send it in a different way.
There is an ability to recall
Doesn't
it.
that violate the whole blockchain?
Well, no, hang on. The ability to recall it exists in the time that the transaction exists in the mempool.
Yeah.
So the mempool is this collection of transactions that still need to be processed. And if you don't want one to go through or you want to cancel one, you can do it while it still exists in that mempool and hasn't been processed.
Sure, but how do you know that you have just sent it to the wrong address until it's gone and the other side hasn't received it? Because for most normal people, they send money and they call the other person and go, did you get it? And they go, no. At that point, they realize that they've sent it to the wrong person. So that mempool is completely irrelevant for those types of transactions.
So if there's no receiving, oh no, wait, never mind.
So I think ultimately, I mean, what we teach people, Minesh, is that you got to be your own bank. That in crypto, there is no FDI. You have to be your own bank. You have to protect yourself. And for me, I'm not a techie guy, and so I've followed certain things such as I double check and I cut and paste. And I've never sent, Bitcoin to the wrong person. I checked the first two. I checked the first two of, each address. I checked the last two of each address and I send it out. As far as being able to just hold on to your tokens, because if you have the keys and you don't share it, then, the blockchain has never been hacked before. You own those, you have that. So just like anything, whether it's gold and you put it into a, safe deposit box or you dig a hole in it or whatever, you have to protect your crypto. And unfortunately I know personally multiple people that have been hacked and have had their crypto taken, and it's a damn shame. And that's why, one of the things that we teach is that you can protect, or you can invest and have all these, great deals and get the inside scoop on tokens. But if you don't ultimately have a foundation of how to protect your tokens in cold storage type of applications, whether it's a software like Exodus, or whether it's like a hardware wallet like Trezor or like Ledger, then you are putting yourself at risk. And so, you have to be your own bank, and you have to really take it seriously because, like you said, there is no recourse. And so that's one of the things that, yes, in the future it will get better. But as of right now, a non-financial, non-techie type guy like myself, like my father, thousands and thousands of people, they are learning how to protect themselves. As long as they know the risks when they get into it, then they can minimize it as much as possible.
Yeah, but the problem with that is so, okay, so one of the things that I fundamentally believe, right, is the mark of intelligence is holding two opposing thoughts at the exact same time. So I think that there is a huge advantage to decentralization. I think the execution is wrong. You guys are proponents of decentralization. So what do you guys think is the benefits of centralization? Because that's really the debate here. Is there a benefit to centralization? And is that benefit to centralization more than the theoretical potential future benefits of decentralization? And my argument is that the benefits of centralization in its current form are much better than the benefits of decentralization for normal people. For crypto guys and crypto experts and people that know how to do this stuff, you guys might be 100% right. And for those people who want the risk of having their money sitting somewhere which could be stolen, you might be 100% right. But for most normal people, the benefits of centralization, the 2% fees for MasterCard or whatever else, completely outweigh the benefits or the potential benefits, because they're not even real yet, the theoretical benefits that decentralization is going to have once your guys or whoever you're wishing, whoop-de-doo 67 on the forums is going to create for you guys and the whole blockchain in 5 years.
As whoop-de-doo 68 on the forums, I resent that. So benefits of centralization are generally, first off, higher speeds, especially with transaction throughput, and then also the ability to coordinate, because you can essentially have an organization that's completely centralized, and that's much easier to manage than a decentralized one. But I think it's really interesting to note that the centralized entity of Visa can do 40,000 transactions per second, and Bitcoin can do 7. Okay, but then Bitcoin with layer 2 solutions like the Lightning Network can do 1 million transactions per second. Visa can't scale to that. So you can actually scale decentralized entities much larger, but it takes some ingenuity and it can't be done right away. But so, again, that stuff is coming, but it takes a much longer time in order to coordinate and in order to implement and then adopt with a decentralized technology like this. So the solutions will be better than centralized organizations, but it's going to take some time.
I'm going to approach the question, Minesh, from a hacking point of view. So one of the, like Bram said, one of the benefits of centralization is speed. But you have to store all that data in a central location, whereas with decentralization and encryption, you do away with the problem of hacking and people gaining access to that data directly. Now, you're talking about a centralized banking system that is actually quite mature in terms of internet years, right? The internet's been around, been mainstream since, let's call it 95. Banking came along on the scene pretty soon afterwards, and their initial security measures were subpar because they didn't know what they were going up against. They just put it online and added some security measures, but they were not as sophisticated as they are today. Today we've got 2FA security measures. Today we've got secret question security measures, and all those things emerged out of a need for this nascent industry to evolve and grow and protect people and make things more efficient. So Bitcoin, if you really want to do a bank-to-Bitcoin comparison, or cryptocurrency, it's a much younger technology. It hasn't grown up as much. And some of the points that you keep addressing, yes, there are issues, sure, but you got to give, if you want to do an apples-to-apples comparison, you got to give Bitcoin and cryptocurrency the ability to mature to the level that banks are today, and then look at the playing field and go, okay, maybe decentralization is a better solution. It's just that right now, you're really not comparing a teenager to a baby, right? It's not.
I agree with you. Yeah, I agree with you. And to that point, what I would say to that is, so then don't you think that the real execution of blockchain to make it truly powerful and actually usable by most people would be using blockchain to help someone like Visa to actually improve and scale their services, rather than trying to defeat the current systems that are already there, especially as you've agreed that the actual proper execution for most people is going to be a centralized version of blockchain at some point. So why not just go use like they're doing, because they're all doing it. JP Morgan, everyone's investing in these technologies, right, to figure out how they can actually implement it. They're going to win. They're going to win because they've got the customer base. They've got the...
Hang on, Minesh. Hang on. So are they going to win? I don't know. I can't. Maybe.
They'll win on convenience.
You made a point about Amazon. You made a point about Amazon in that post, and you're right on the money. You know, I had that thought not too long ago. You are right on the money. If Amazon stood up and said, hey, coin that people could redeem at Amazon shop, and we could use in the same way that Video Coin is using it, so we could leverage people's computers to do our transcoding and get rid of all of our cloud compute services and go completely decentralized with our cloud. Yeah, man, they own it. Like, that's it. Done. You know, the game's over. They will skyrocket to the top, and Amazon coin will be the number one cryptocurrency out there. Yeah, sure. Why aren't
and
there?
It's centralized.
And well, no, hang on.
It's no longer anonymous.
The entity is centralized. It's definitely not anonymous, but Graham was alluding to that already, talking about tying your identity to financial transfers. So he's already alluding to not making it anonymous anyway. And we've already talked about that point, which is that there's a sector of the world that I think requires anonymity, and then there's a sector of the world that doesn't require it. And in those sectors, you know, you won't necessarily have anonymity. You'll have know your customer and identities tied to those transactions. And I think that'll happen over time.
The problem with that is, sorry, go on, continue.
No. I think I lost track anyway. But you got my point.
Yeah. So the anonymity thing, right? Unless you have no anonymity, you will always have manipulation in the market, and that's the problem with it, right? Because there's an argument, and I don't know how real it is. I'm not one of you guys, so I have no idea the legitimacy of it. But it makes a little bit of sense to me as a markets guy. And so the reason why, one of the theories around the reason why the price went up so much is that because if I'm sitting here with $10 million and I want to play with this market, I can create 100 different accounts and start wiring $10 million worth of Bitcoin from one account to the other and create fake volume, which will drive other people into the market, and then I can cash out and stop. If you have anonymity, that will continue, and therefore the coins are not safe enough for most people to use as a currency. So as a currency, I'm not hearing any commentary from you guys going, this could be used as a currency. So is the whole industry moving away from the whole cryptocurrency thing, or are we just have got no answers for that? Because it can't be used as a currency, so the next thing we can use it as is a token. It can't be used as a token because people are selling stuff that they shouldn't be selling using this token. So now we're going to use it as a security token. Problem with that is how do you legitimize a security token and those distributions coming out how do you audit that? How can you make sure that the company is doing what it's actually meant to be doing? You're in the same situation as the risks that you have now. The only value that I'm seeing from speaking with you guys is it makes the current systems more efficient, which makes 100% sense to me. And that's what I said to Colin when we met. Making current systems more efficient makes complete sense. Trying to destroy whatever's out there doesn't make any sense whatsoever.
Yeah, so
Go ahead, Greg.
On the currency aspect, Polymath is now a team of 35 people. Everybody gets paid in cryptocurrency. So how is that not a currency?
So what do they do with that crypto? What do they do with that Polycoin or whatever they're getting paid in?
Yeah, so it depends. People can do whatever they want. Some people do because the infrastructure is not in place to pay your rent in some places in that cryptocurrency. Yeah, some of the people do have to use government currency today. But I mean, I don't think that's going to be the case in 5 or 10 years. There is a financial incentive for people. Yeah, go for it.
So what you're saying is that at some point in the future, a landlord like me, I'm a landlord, right? A landlord is going to say, okay, I will accept Polycoins or Ethereum coins or Bitcoins as rent for you staying in my apartment.
That's already happening. Yeah.
I agree. Yeah. I agree. And I agree. And the reason, and so you have to go back to the reason why that's happening. And you got to look at, is the reason a long-term reason or is the reason a short-term reason? And I believe, and you guys can correct me if you think I'm wrong, that the reason why it's happening is me as a landlord is going, hey, I don't need this $2,000 that Graham's going to give me to stay in my place right now because I don't need to use it for anything. How about I take the risk of leaving it in Polycoin or in Bitcoin or in Ethereum, and hopefully Ethereum goes up in value or Bitcoin goes up in value, and that $2,000 worth of rent that I didn't need to spend today as a landlord goes up and is worth 10 grand tomorrow. And then I'll come out of it. So my only reason for staying in it is for price speculation. That's it. And at that point, actually as a currency, it's pointless.
Minesh, what's to stop the same landlord from taking that same $2,000 and buying Swiss francs with it on the same belief?
Nothing. Nothing. Therefore, it's exactly the fucking thing. That's what I'm trying to say.
But wait a minute.
Exactly the same.
Hang on. I said Swiss francs, which is a currency.
Yes.
So if I pay the landlord in
it's exactly the same.
Right, so it's a currency. I mean, you're kind of making the point that it's a currency by telling me it's exactly the same.
But that person,
if I pay the landlord in Swiss francs and he decides to keep it in Swiss francs, which is a currency that he can use in Switzerland, what's the difference between that and me paying him in Bitcoin?
Because you can use Swiss francs to pay taxes. You can't do that with Bitcoin. That's one of the tests.
You can in some jurisdictions.
So
yeah,
if
I think Arizona just allowed it.
Minesh, if I live in Arizona, you're wrong.
Yeah.
I didn't know that, so I'll have to look.
And if I live in Wisconsin, you'll be wrong in a few months.
so Arizona is a.
And this goes back to my point earlier, which is banking system, Bitcoin, right? You're comparing a teenager to or forget banking system, fiat currency, right? Is a full-grown, middle-aged man compared to Bitcoin's baby, right? You gotta give cryptocurrency. You can't take today a matured market that is fiat currency and apply the same requirements to an immature Bitcoin market. It's coming, right? And our answer is you're going to get a lot of answer from people saying it's coming. But what I hope examples of it coming, right? The crypto kitties, the fact that you can pay taxes in Arizona, the fact that there are more wallets that you can use today that make it easier for you, the fact that there are decentralized exchanges, right? All these things. Yes, the answer is it's coming. Sorry. But that's just because fiat is so mature.
And I think that's one of the reasons why it's such a great time to get involved now is because there are so many different projects that, yes, once it is all figured out, once there are all the answers to it, once we have figured out all the technicalities that you're bringing up, Minesh, it's like at that point, now it becomes mainstream. The beauty of this, I believe, is that, we are getting in this. This is Internet 96. It's just the same thing. Like, it was a pain in the ass to wait for the phone modem to ding, 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 go through. And it was like, it was horrible. It was like, are you kidding me? This is not a great experience. My brother would pick up the phone and I'd get knocked off and I'd have to wait another 5 minutes to go on. I mean, it was a pain in the ass. The internet sucked for a good portion of time. I remember on the 24/6, the modem speed, it would take like 10 minutes to download a full page. It was not easy. It was painful to do. And so, I think that can almost be a benefit. The fact that all of this isn't figured out, I truly believe that's another reason why it makes sense to get involved. Don't put all of your money in. Don't, don't take loans out. Continue to buy in real asset producing or revenue producing businesses or assets like real estate, Minesh, but look at, what is being created, look at the space and the incredible amount of really smart people from everyone from Branson to Bill Gates to Rockefellers. Their fund just decided to get into the space. George Soros, one of the most famous investors, he just decided to get into the space over the last couple of weeks. It was announced. And so, there are really intelligent, sophisticated investors from the traditional financial world that are getting in. And so when I see the Twitter CEO saying that, Bitcoin is going to be the dominant world currency, there's got to be some reason for all of these super intelligent people that saw the internet before it was the internet, that saw, the Microsoft Windows before, we had an idea of even what the hell a mouse was. These are the people that, are the visionaries. And that's what, for me, that's what I'm looking at, is that yes, there are problems to it, but that also what leaves so much opportunity.
So one reason why you just said, so there's one thing. So you guys said I can pay taxes in Arizona in Bitcoin, but what I've found on the internet is that the Arizona House of Representatives has recommended the passage of a bill that allows the residents to pay. So I don't know whether that bill's passed or not. I'll have to do some further research on that. I'd love to That's the monster.
Yeah,
So that's not happened yet,
right.
right?
The fact of the matter is that more and more entities and more people are willing to accept it. And it's just like the fax machine. The fax machine isn't that it only has a certain amount of value if only 100 people have it. But once you have millions of people that are all deciding that, hey, this is what we're going to use, then the value increases. And I think we're going to continue to see major businesses, institutions, governments are going to say, you know what? We'll take people's value however they want to give it, whether it's dollars, whether it's Bitcoin, we'll take it.
So my second point on what you said was the fact that there's a lot of opportunity in the space now. There's a huge amount of opportunity. That's why you should get involved. The fundamental reason, the undertone of why, the fundamental reason why you said that is because there is opportunity to make money for normal people. And I completely agree, right? In all of my commentary about Bitcoin and crypto, I've always said there is absolutely potential to make money here, except it's a 99% risk asset. So don't put too much money into it, but there is potential to make money here. What I'm arguing is that you shouldn't, Peter Schiff says this, you shouldn't confuse a bull market with a good idea. We see too many bull markets that are not good ideas. So can you make money with it? Absolutely. I've said that all the time. I'm looking at it as an good idea as a use case for the world.
It's a great idea. Minesh, I mean, these guys, I'm sending value. Minesh, I'm sending value from people. I'm sending value to people. I'm sending crypto and getting involved in ICOs, and I'm doing this without the use of a bank, without having to wait. I'm getting a wire from Hong Kong, and
you have to use a bank because you have to use a bank. Colin, you have to use a bank.
Minesh,
what do you mean?
I'm saying a bank.
Minesh, how do you argue? Sorry, Colin, hang on. Minesh, how do you argue against the UN leveraging the power of cryptocurrency to transfer value around the world, bypassing the banking system and saving themselves $2 million a year?
So I'll have to go and actually look at that and see what they're doing. But what I'm assuming that they're doing, and you can correct me if I'm wrong, is they're taking US dollars or whichever currency they want to send, putting it on the Ethereum network, sending it across to Africa or wherever. They're taking it and converting it back into the US dollar. So Bitcoin makes a lot of sense to me if it's pegged against the US dollar. Is that what your plan is?
Pegged. Why pegged? Because it needs to maintain its value. But hang on, that's only because vendors in Africa don't accept Bitcoin yet.
But even when they accept it, they're going to want food. They need to convert their Bitcoins into real currency because you don't have to convert it. Agree to hold their value in it.
But you don't have to convert it if people are willing to accept it as payment.
But who is going to be willing to accept and store? So the only reason I accept US dollars as payment for my services is because I can believe in the stability or the slowest decline, i.e. inflation, of the value of those US dollars so that I can do whatever I want to do with it.
Hey, Minesh, can I hire you for Zimbabwe?
Bitcoin's going up $1,000 a day and down $1,000.
Minesh, can I hire you for Zimbabwe dollars?
Say that again?
Currency.
No, absolutely not. I don't trust it.
Why trust dollars?
Why trust Bitcoin?
Because Bitcoin is backed by an algorithm that secures it. Bitcoin is not subject. I mean, it is subject to human manipulation, but it's not subject to human manipulation in terms of the amount that are out there and the interest rates on which you've got to buy it, right? Bitcoin is a currency that is secure. The transactions are secured by algorithms that are protected by encryption and allowing people to transfer value all over the world. Now, you're right. The adoption is not as great as fiat currency. But if Bitcoin had adoption in the same level as fiat currency, you're telling me it couldn't be used as a currency? That the value of Bitcoin wouldn't be so high that a fluctuation of $5,000 would represent such a small change in terms of percentages of what you hold that it really could be used as a currency?
So you think if Bitcoin was going up and down $5,000, right, and say the Bitcoin was $1 million a coin, right, and Bitcoin was moving $5,000 by the time you sent it to someone, that wouldn't be a problem. The only reason
hang on, Minesh. To answer that question,
inflation, if you want to believe the government, sitting at 2%. I think it's sitting at 8%. But over a year, not in a second. not by the time I've sent a transaction to someone. That's the problem with it. It's
wait a
too
minute.
volatile as a store.
Wait. You're telling me Forex values don't change every second? The dollar, the global value of the dollar changes every second. So if you send dollars to France and they convert it to euro, that same amount of dollars. I'll give you a real world example, damn it. I booked a hotel in France and I paid US dollars that got converted by the credit card company. When I canceled that hotel later that month, I got more US dollars back because the value of the euro had gone down, right?
Yes, but listen, you've just confused, Tristan, you've just confused Forex, which is a trade, to storing value in a particular currency.
Not
That's
on
the
the
difference.
stage.
Forex is a trade.
But on the
Of course,
global
it's going
stage,
to go.
yeah, but on the global stage, if I store value in dollars and I travel to Switzerland, that value in dollars is going to change minute to minute based on the exchange that I go see.
Because you are now spending it and you're trading it. I'm talking about in the US as. This is basic finance. Like there's a difference between a Forex transaction and a storage transaction in a particular currency. Two different things. I'm not talking about Forex. Forex is a trade. It's a transaction. You have to pay fees on that. And there's an exchange value on that, right?
Okay.
I'm talking about receiving money and me going, I'm going to store my money. I'm going to get paid in US dollars and I'm going to store it in US dollars because I believe that the US dollar will have value in a year. With that scenario, Bitcoin is pointless because we don't know what the value of it's going to be in 2 minutes. It's not stable.
So could you make that same argument given what happened in 2008 and what might happen in the future? You know, the U.S. printed so much money that interest rates, but we're approaching the same problem that Japan has had since the 80s, which is that our interest rates had to be, okay, so then how do you put faith behind a dollar that's in that environment?
I don't. What I say is it's more stable than Bitcoin. The U.S. dollar is more stable than Bitcoin. Bitcoin makes the U.S. dollar look safe.
Today. But if you're switching up because you're talking to me about Bitcoin at $1 million and then talking to me about Bitcoin at $7,000.
No, I said that as an example. But
again, Minesh, it goes back to adoption, right? Let's look at Bitcoin as being as adopted as the U.S. dollar. Right? Everybody in the world accepts Bitcoin because everybody in the world accepts US dollars. You're telling me at that point it couldn't be used as a store of value? No, I reject that.
The problem with that is that in order for it to get there, you've got to solve the other things that we've spoken about, which is the problems of decentralization, and you can't have any answers for that.
Which is why you can't compare fiat to Bitcoin today. It's like comparing a middle-aged adult to a baby, right? You can't make that comparison. And all your points are back to me saying, Bitcoin doesn't satisfy this, Bitcoin doesn't satisfy that. Well, you know what? It will. And I know that's the answer you hate, but you're not drawing the right comparisons.
Colin, when we agreed to this, one of my things was I don't want the answer to get solved in 5 years. However, that's obviously, so I understand developing technologies, right? So that's got to happen. And I empathize with that answer. So in that scenario, my concern goes to people telling normal people to invest in these things when they're not ready to be invested in by normal people that can't afford to take those risks. That is my biggest problem. It's people that don't even understand. With respect, you have not been able to answer my questions of how it will be solved. And that's because it's not your bag. It's the developer's bag to solve that. And so when you guys are going, oh my God, everyone should invest in this stuff, that I think is unethical because you don't even understand how it's going to solve it yourself. At some point in the future, it's going to be, it hopefully will be solved. Hopefully the US dollar will go away. Hopefully all these companies will disappear. Hopefully you guys will be running the future of finance. But until then, stop telling people that don't understand the true risks of it to get into it just for money. That will get.
Minesh, I don't know. He locked up there. Did everyone lock up?
No, I'm here.
All right.
I did lock up for a second.
Good. Yeah, for a second.
Minesh, you got some shoddy internet over there. What you doing?
Minesh,
Can you hear me?
yeah.
Can you hear me?
So Minesh,
Did you catch the end of my point? It froze.
I did. And with respect to myself, whenever someone asks me about Bitcoin and whether they should invest, I tell them right off the bat, today it is a high risk investment. If you really want to get in, Get in with money you're willing to lose. In fact, you might have a better chance of making money taking that money to Vegas. No, you still want to get in? Okay, let me tell you about Bitcoin. And I open with that with everybody because you're absolutely
I appreciate
right.
that.
Today, it is a high-risk investment, right? I agree. My future vision of Bitcoin is totally different. It is a store of value. It is a global currency. It is something that you can trade anywhere in the world without the need for exchange. But that's not today, and I consent to that.
That's true. My future vision of my stay in Colombia is I'm going to have a bunch of Latinas, 50 of them on this balcony. But that future vision isn't actually executing right now. When it does, I'll let you know.
When it does for Bitcoin, I'll let you know.
Minesh, for the risk aspect, the U.S. dollar's lost 96% of its value since 1913 when the Federal Reserve was created. And Bitcoin has gone up 10,000% in the last 8 years or whatever. So what's really risky in this scenario?
So you're absolutely right. But Bitcoin's gone up in a very, very short period of time, and it's gone down in a very, very short period of time. The U.S. dollar has gone down consistently over a very, 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 very long period of time, which allows investors to do things with that money to hedge against those risks. Whereas with Bitcoin, you can't hedge against those risks because it's moving too fast. As a currency, you can't hedge against it. You can't rely on the future value of it. Whereas the US dollar, I can say, okay, it's going to go down somewhere between 2 and 8% over every single year over the next 50 years, for example, right? That's just how fiat money works. And so now I can make investments to hedge against that. How the hell am I supposed to do that with Bitcoin when by the time I send it from here to you, it could be worth 5% less?
But so what you're saying that you'd rather hold something that you know with 100% certainty will lose value rather than something that might actually go up. You're saying that's what you prefer.
As an investor for normal people need to use, and I don't advocate holding money in US dollars, by the way. I'm an investor. I'm an assets guy. So I'm looking at it going, Bitcoin, all you can do is control the supply of it, right? Whereas you can central banks can take and put measures into place to control the supply and demand of currency to maintain its value, which is how inflation is maintained over a very, very long period of time. No one's saying that the US dollar is going to hold 100% of its value. Absolutely not. What I'm saying is that as a currency, the US dollar is safer simply because it allows you to have a predictive estimate of how much your currency is going to lose over time, whereas Bitcoin could go up $5,000, down $5,000 by the time I've sent it to you, right? If I buy a car from you for $35,000 US dollars, for example, I send you Bitcoin. By the time it gets to you, it's $30,000. Are you going to call me and say, no, that's okay? Or are you going to say, wire me the other $5,000?
Yeah, that's what happens every 2 weeks when I get paid. The value fluctuates widely in the ether that I receive, and I personally am comfortable with that.
Exactly. You're personally comfortable with that. Normal people are not personally comfortable with that, and normal people are the people that are going to determine whether this actually gets adopted or not, or whether it gets left to us guys to send Bitcoins to each other because we make silly bets, like whatever silly bets we want to make whenever we're hanging out. That's my problem with it. For use case scenarios, it's no good. For mental masturbation about a concept, it's a fantastic idea.
So Minesh, your problem with Bitcoin today is that your average Joe who doesn't understand the market and doesn't understand the technology is mortgaging his home and buying Bitcoin with it, right?
My biggest problem. That's one problem, and I think that's a problem all of us have with that, right? I think if any of us have a heart, we would have a problem.
Let me ask you this, and it's a personal question: if you were to take a guess. Yes, Bitcoin will make it, no, Bitcoin won't make it. Or yes, cryptocurrency will make it, no, cryptocurrency won't make it. Which road would you go down, personally?
No, cryptocurrency won't make it.
Won't make it. I used to think that back in 2013. 2014, there was a major crash like what we just went through in 2017. The numbers were not the same, but the percentages were even worse, right? Bitcoin dropped 90% back in 2013. And when Bitcoin did that 90% drop, I was pretty much like, done. Bitcoin's finished. There's no way, right? And I was proven wrong. And I kept up with it, and I kept looking into it, and I still held my Bitcoin out of sheer hope or belief or the fact that it was too cheap to sell anyway. So I held them, and I made it through that time and saw what happened in 2017. I just don't think it's going anywhere anyway at this point anyway. I think the currencies are here to stay. I don't agree with you in terms of what road they're going to go down, largely because they had many times in the past, I think they're 4 now, major crashes. They've had 294 declarations of death, and still Bitcoin's soldiering on. And I jumped camp. I'm no longer in the camp that believes it's not going to make it. After it made it, after the 2014 crash, I believe it will. I believe it will find its place in the world. And I believe that in the future, a lot of the things that you would like to be true today will come true. But today, that's not what the technology is supposed to solve, right? It could solve it in the future, but today that's not what it's solving.
I hope humanity does a lot of things in the future that are really great for humanity, right?
I agree.
I think we all agree on that. I think that as a final, because we've been on the call for like 9 minutes, and 2 minutes. I have a client call. I have to jump off in 2 minutes, but I'm going to try and stay right until the end. We can push it as far as we can. But my ultimate biggest frustration is that you guys, experts, crypto people, can't answer simple questions about use cases of these things for normal people. And only when normal people use them will they actually become mass adoptions. And you can say as well, using a country like Venezuela as an example, is that, like Colin said, they're demanding, or I don't know who said it, but someone said they're demanding Zcash because they can go from Venezuelan currency to Zcash back to the US dollar. That's the problem with it.
Minesh, I think we should let the audience decide whether we answered your questions or not.
Yeah, I agree. I mean, to keep on saying, like, yeah, we didn't answer your questions, Minesh. I mean, it's just it's a great way to say that. It's like we spent an hour and a half, like obviously we weren't just sitting here. Like I think that what they used in the specific use cases that they shared, I mean, are legitimate. I don't know if you don't like the answers that you're hearing, or that maybe you haven't done enough research on the things that they're sharing, but they answered your question.
Well, we started off. No, I appreciate you answering my questions, except I just don't think they're satisfactory. I think that's okay, right? We started off with the 2 examples of a vending machine and the iPhone on Craigslist, which is cool. That's an interesting example. Except the vending machine has been solved, and the iPhone on Craigslist is completely subjective to whether I'm a good human being or not. So therefore, the smart contract is no better than having a normal standard agreement. So based on that, I think your answers are dissatisfactory right now. I hope that the community does what it can to create a new technology to actually put this into effect the way you guys think it's going to happen. But at this point, I'm not satisfied with these answers. I think normal people should stay away from it. And if they want to just put some insurance so that they profit, because I'm completely cool with profiting and profiting from the price speculation of it. I think, as I tell all of my clients, put 1% of your net worth into it, and then maybe it'll be worth a lot of money. Until then, if you don't actually understand this, and the guys that are trying to do it don't understand it and can't answer questions as from a normal person's perspective, stay the hell away from it. That's just my perspective.
Yeah, sorry if I wasn't clear on the vending machine thing. Is just the concept of, like I'm saying, any type of simple contract where if I do X, I want Y. Like I'm just saying anything that exists like that in the world where 2 people have to sit down and sign their names on a piece of paper, I'm saying you can do away with that. So anytime there's a very, very, very simple contract that has 2 people where one person gives something and the other person gives something, that's where a smart contract can be used. And then
so here's my last thing that I want to say, right? Because I was in Singapore and we had this example of, sorry.
Go ahead, Minesh.
Sorry, do you want to finish? It was okay, cool. So I was in Singapore and we had this situation where a guy was saying, if people want to use, so I'll just forget the Singapore thing. It's the exact same situation. So in that vending machine scenario, right? We've all had this happen. You put the coin in, you press the button for what you want. The thing starts unwinding. It drops your chocolate bar and it sticks itself in the machine, and you don't get it. The problem is a smart contract in that scenario, even in the simplest form of what you've just said, would register that as product being delivered and pay and accept the money. And that's the problem with it. It's a collective of humanity cannot be programmed into a smart contract. Same thing with this example in Singapore. It was, what if a farmer wants to sell rice to someone that wants to buy it as long as the temperature is right? Fantastic. Have five data points to make sure the temperature was right, and then the farmer gets paid out, and it's super simple. That works, except what if the farmer was an asshole and didn't send the actual seeds to whoever we wanted to send it to? What if you have a car crash and you've got a smart contract based on your insurance? Fantastic, that works well. Except what if the driver's an asshole and lies about the fact that he has an accident? And then someone's got to verify it. The moment someone's got to verify it, it's no longer decentralized.
Minesh, smart contracts don't solve those problems because they deal with, unintended events that might happen. And your vending machine is a good example of that, where the vending machine doesn't care that you didn't get the candy bar. The contract is satisfied. Right. But that's still a real-world example of something that happens today. So smart contracts today, since we like to see what they can do today, provide, as I said in the beginning, automated permissionless escrow service to the public. That is cheaper than leveraging a bank's escrow service or a law firm's escrow service, right? And that's one of the advantages that smart contracts leverage today, and allows for things like CryptoKitties, which you couldn't do with a traditional banking-based escrow system because the fees would be too high.
So let's actually, one of us, and let's wrap this up. We have been on the call for a while, and this is a good call. I don't know if Minesh, as far as you're wanting the answers that are satisfactory. I mean, I thought they gave some really good comments as far as what it is that is being used right now, and then obviously the future and what it holds. And frankly, one of us is going to be right and one of us is going to be wrong, and we're going to be able to have this video for posterity, and we're going to be able to say, "We told you so, Minesh. We told you, bro. You should have put more than 1% in, bro. You're 1%." And that's fine. So let's leave it like here. Let's actually say 1 year from now. So April 9th, 2019, what is the price of Bitcoin, Minesh?
I have no idea. I wouldn't even want to guess. I literally have.
I mean, if you say it's not going to work, if you say it's not good or it's not going to, it's not going to catch on, then
CDOs,
what are you saying?
CDOs took 6 years to fail. I have no idea how long it's going to take. I have no idea. And I've said that right from the start. I have no idea how long it's going to take to fail. I have no idea how long it's going to take to succeed. I have no idea whatsoever. All I know is the fundamental questions, they're not satisfactory. So from that perspective, I'll leave all the price guessing up to you guys. I don't really price guess on that. So I'll leave that up to you guys.
Minesh, how about this question? Let's do what percentage of global GDP gets conducted through the transfer of cryptocurrencies as payment
right now?
in 10 years from now, in 2028.
You're assuming that the thing's going to last for that long.
Yeah, so you can say 0% if you'd like.
I don't know, because there'll always be some. I'm not saying. I don't know. I really don't know the answer to those questions. You guys are asking questions that require me to have a real in-depth knowledge of crypto to actually answer those questions. Like, I can answer the simple question of, do I think crypto is going to be around in 10 years as in its current, in the way that it is right now? No, I don't think so. But how much of GDP is going to be used for crypto? I genuinely cannot answer that question.
Fair enough. All right, gents, any last comments, thoughts that you guys want to share?
Yeah, I'll say last thing. Bitcoin and the related technologies allow for money to be programmable. Why would you ever go back to a world where money is not programmable?
Because it's safer, potentially, with what's going on.
I think we're opening up another can of worms, gentlemen. We're going to keep an hour and a half.
I really have to go. I'm 7 minutes late.
I agree with what you just said, Minesh. So, I think we should just end it here.
Yeah. But I just want to say, Colin, Tristan, Graham, thank you so much for having this conversation. I think that these sorts of conversations don't happen as often. And I think the most valuable thing that came out of this is whoever's watching this right now has the ability to look at both sides and go, what do I want to do with my money? I'm not here to tell you what to do with your money. Neither are any of these guys. You've got to decide, what do you want to do with your money, and what result and outcome do you want from your money? And all of these conversations are just opportunities for you to have further thought. So guys, I just want to say I really appreciate you guys, and I'm a big fan of what Polymath actually intends to do. So I hope that goes really well.
Excellent. Yeah, I appreciate you being on, Minesh, and you know, the fact of you wanting to learn, you know, crypto and understand it more and ask the tough questions. A lot of people just want to say F it and, you know, no, I'm not interested, and no, it's a Ponzi, or, you know, any of the other type of things. So, you know, you're asking, you know, real questions because, you know, you're a curious guy that, you know, wants to understand this more. And so very much appreciated. And also Tristan and Graham, appreciate you guys for jumping on. And I guess all we can say is we will see. We'll see which way this is going to go, and we'll see how the industry, you know, continues to improve and develop. But you know, my money is on crypto, and I know Tristan and Graham as well. But you know, ultimately, future will tell us, you know, who are the victors, so to say.
Cool.
So awesome.
Thank you so much, guys.
All right, guys. Yeah, have a great one, gents.